Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica.
And my name is Guy. Here are the top stories in crypto this week.
Biden vetoes bill. President Biden strikes down on a pro-crypto resolution recently passed by US politicians, suggesting the current administration's tone on crypto hasn't changed. Everything you need to know.
Uniswap postpones proposal. The Uniswap Foundation puts on ice a governance proposal that would have benefited uni holders after a stakeholder speaks out. Why this happened and why it's significant.
Mt. Gox BTC Moves. Defunct crypto exchange Mt. Gox transfers over 140,000 BTC, worth over $9 billion, to a new wallet as it prepares to repay creditors. What does it mean for BTC?
No Solana ETFs. Megabank JP Morgan pours cold water on the possibility that Sol could get an ETF of its own following the approval of spot Ethereum ETFs. When could Sol's turn come?
BTC on balance sheets. Stocks in Salma Scientific spike after the healthcare company reveals that it's begun buying BTC to hold as reserves. How much could this impact crypto and stocks?
Inflation stays still. The PCE for April suggests that inflation is stickier than expected, foreshadowing continued high interest rates and possibly even a rate hike. Who you need to watch to find out.
And a closer look at last week's top performing cryptos and where they could be headed next.
All this and more in just a moment. Late last week, President Joe Biden vetoed a pro-crypto resolution that had been passed by US politicians along bipartisan lines, meaning members of both sides voted for it. For context, this resolution would have struck down an SEC rule that basically makes it impossible for banks to custody crypto for their clients. Notably, this resolution is not the same as the pro-crypto bill titled FIT21. Whereas the resolution involved removing a specific SEC rule, FIT21 contains a whole framework for crypto regulation. FIT21 is still working its way through the political process and will hopefully be approved in the coming months. Even so, the fact that Biden struck down the pro-crypto resolution suggests that the administration's stance on crypto hasn't changed. For reference, it's believed that many of the anti-crypto actions we've seen from the likes of the SEC have their roots in the anti-crypto policies of the current administration. That's why the SEC's approval of the spot Ethereum ETFs led people to believe that the Biden administration had changed its tune on crypto. Biden's move to veto the pro-crypto resolution has called this into question, and it's worth pointing out that it's not the only contrarian indicator. Senator Elizabeth Warren has also been ramping up her anti-crypto rhetoric after it was assumed she had been called to heel. Similarly, the Treasury Department put out a report alleging that NFTs are being used for illicit finance. You know they're getting desperate when they're going after NFTs. Now, this all suggests that the current administration's attitudes towards crypto are still up in the air. More importantly, this means that crypto's importance as an election issue remains unclear. For those unaware, it's assumed that Biden flipped on crypto because of the upcoming election. Obviously, if it turns out that crypto is not as big of a political issue as it seems to be, then the current administration may continue down its current path. Consider that flipping pro-crypto would result in a self-fulfilling prophecy by juicing the markets and making crypto an ever larger force in the election. Now, the good news is that you can maximize your gains regardless of what's going on in the White House using the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $60,000 on the best crypto exchanges. Link below. Anyway, politics aside, the fact of the matter is that the winds of regulation continue to blow in an anti-crypto direction, at least in the US. One of the many crypto projects that's come under scrutiny recently is Uniswap, specifically Uniswap Labs, which recently sent its Wells submission to the SEC. FYI, a Wells submission is essentially a letter arguing why the SEC shouldn't sue. It's a response to the Wells notice, which signals the regulator's intention to sue. 80% of the time that a Wells notice is issued, the SEC will sue regardless of the Wells submission response, so the odds aren't in Uniswap's favour. In other words, there's a high likelihood that the SEC will sue Uniswap, but of course there is no guarantee. Statistically speaking, there's a 20% chance it won't happen. There are also the specifics of the SEC's potential case against Uniswap, which are unknown, but likely involve the Uni token. This is where Uniswap's recent governance proposal comes into play. To bring you up to speed, the Uniswap Foundation was going to table a proposal that would have effectively made it possible for Uni token holders to earn a portion of protocol fees. The effect of that proposal passing would have been a pump in the price of Uni. However, the Uniswap Foundation has now delayed this proposal indefinitely, but that should come as no surprise considering the SEC's targeting of Uniswap Labs. If the proposal was to be tabled, it would almost certainly be passed. This would turn the Uni token into something that looks more like a security. In plain English, Uni would start to look more like a stock in a company, because holders of the Uni token, including Uniswap Labs, would practically be getting dividends in the form of DEX fees. It's safe to assume that this would probably guarantee that the SEC would follow through with suing Uniswap Labs. Given this fact, it's possible that the stakeholder which requested that the Uniswap Foundation delay tabling the proposal was in fact Uniswap Labs itself. Many people believe, though, that it was a VC that requested the pause. This would likewise not be surprising given that VCs have an outsized influence in DAO governance. Believe it or not, but it would actually be better if it was a VC because if Uniswap Labs influenced the decisions of the Uniswap Foundation, that could also give firepower to the SEC. That's simply because it would prove that Uniswap Labs can exercise control over the Uniswap protocol. Complex stuff. Speaking of complexity, the recent movement of over 140,000 BTC belonging to the Mt. Gox crypto exchange seems to have spooked the markets because BTC dipped the moment investors became aware of it. As most of you will no doubt know, Mt. Gox was a crypto exchange that collapsed way back in February 2024. Over the last decade, creditors, that is, people who are owed money and crypto, have been trying to get their money and crypto back from the defunct exchange. Funnily enough, the ridiculous duration of the bankruptcy process has forced these creditors to hodl, meaning they are up quite a bit on their crypto. To put things into perspective, BTC's price was around $500 when Mt. Gox collapsed. This means that creditors are up around 140x on their BTC bags. Logically, this has led to the expectation that many of these creditors will sell their BTC as soon as they can, hence the concerns about the BTC movements. Thankfully, former Mt. Gox CEO Mark Karpeles noted on X that the 140k plus BTC were moved to a single wallet in preparation for creditor repayments, which will likely start sometime later this year. Naturally, some had assumed that the movement meant that the whole BTC stack was about to be sold. Now here's where things get interesting. According to a report by Protos last year, a small number of claimants are owed most of the BTC. Although the identity of all of these claimants is not known, some of the largest ones are recognizable, including Kraken and its former CEO Jesse Powell, who likely won't sell. Moreover, there have been numerous reports of investment firms offering to buy the BTC claims off of creditors for up to 90% of the claim value, a steep discount. The most recent of these seems to have been an offer by Fortress Investment Group in 2021. It's unclear, though, if anyone took them up on the offer. What is clear, however, is that any large BTC creditors who are looking to sell will likely do so over the counter, or OTC. As some of you will know, this would involve selling that BTC directly to another individual or institution without the use of an exchange, thus minimizing price impact on the open market. On that note, depending on when the BTC belonging to Mt. Gox creditors is distributed, it could have a negligible effect on BTC's price. If the markets are bullish, it's likely that a few days of buying from the spot Bitcoin ETFs will be enough to offset any selling pressure from creditors, and then some. The profound effects that the spot Bitcoin ETFs have had on BTC so far have been a sight to behold. It's quite possible that BTC would be nowhere close to where it is today were it not for those ETF approvals. This is why the passing of the spot Ethereum ETFs was such a big deal. The same could happen for ETH. The caveat, though, is that institutional investors do not seem to be as interested in ETH, at least according to JP Morgan. The megabank believes that the spot Ethereum ETFs, once listed, will see only around $3 billion of inflows by the end of the year. The spot Bitcoin ETFs could hold $30 billion in BTC by then. This makes sense given that the spot Ethereum ETFs do not allow staking, and this makes them functionally identical to the spot Bitcoin ETFs. While it's true that Ethereum has fundamentally different properties to Bitcoin, the average institutional investor doesn't really care. BTC alone is sufficient crypto exposure. The catch, though, is that we've seen evidence that institutional investors are invested in altcoins, particularly Solana's SOL. Some of you may recall that Grayscale's Solana Trust was trading at a staggering 9x premium last year. This screams high demand for SOL. Even ARK Invest CEO Cathie Wood was shilling it. Now, while that hype has died down somewhat, it has nonetheless led to speculation that Solana could be the next cryptocurrency to get a spot ETF after Ethereum. As JP Morgan pointed out in a recent report, however, this is unlikely for many reasons, including the fact that the SEC already referred to SOL as a security. If you watched our recent video about which crypto ETFs will be next, you'll also know that it could take years for the spot Solana ETFs to be approved regardless. That's because they first need to list on the CME. History suggests that it will take a couple of years before futures ETFs come, and then, finally, spot. For the time being then, it's likely that BTC will continue to capture the lion's share of ETF-related flows. Besides investors being cautious with crypto investing, Bitcoin's digital gold narrative is just easier to digest, and it's a narrative that an increasing number of publicly traded companies are eating up. The latest company to take the orange pill is Selma Scientific, which announced that it would be making BTC its primary reserve asset, starting with a $40 million investment. Not surprisingly, Chairman Eric Selma explained that the company sees BTC as an inflation hedge and a safe haven asset. What is surprising, though, is that the announcement caused Selma Scientific's stock to jump by almost 30%. This is surprising because it suggests that stock market investors are, in a sense, rewarding the company's BTC decision by buying its stock. Then again, they could just see it as a smaller cap proxy play on BTC. For those unfamiliar, many investors were treating MicroStrategy stock as a proxy for investing in BTC. It was believed that this would stop after the spot Bitcoin ETFs were approved, but the strong correlation between MSTR and BTC remains. It seems that Selma Scientific is falling into the same category. The difference is that MicroStrategy's market cap is 100x larger than Selma's, and it also holds around 350x more BTC. Still, the significance of Selma's decision cannot be understated. According to BitcoinTreasuries.net, it's the only publicly traded company not related to crypto that currently holds BTC. And not only that, but the fact that its stock responded so strongly after the company bought BTC suggests that other companies could follow suit, even just because it could give them a short-term boost. This would cause BTC's price to rise, which would increase the valuation of the BTC the companies hold. In turn, this could cause more people to buy the stocks of these companies, giving them more capital to buy BTC, and so on. Some would say that this is almost exactly what MicroStrategy has been doing, and there's no denying that it's been a very lucrative method. MSTR is up 10x since 2020. This begs the question of whether the valuation of these companies is the reflection of a bubble or the reflection of the fact that fiat currencies have lost anywhere between 20 and 40% of their purchasing power in recent years. As far as the Federal Reserve is concerned, this froth is evidence that interest rates aren't restrictive enough. When you combine this froth with the sticky inflation we're seeing in the CPI and PCE, it increases the chances that the Fed will keep interest rates higher for longer or possibly even raise them again. We're going to find out soon because the Fed's next meeting and rate decision is only a week away. Make no mistake, The Fed is very unlikely to raise rates at its next meeting. Investors are expecting no change in rates, and the Fed doesn't want to surprise the markets. The thing is, though, that the next meeting will include the Fed's projections on where it sees interest rates heading over the next year or two. This is where Fed officials could signal that they're in favor of additional rate hikes. If enough of them note that they want to see more rate hikes or even just keep rates higher for longer, this could be enough to spook the markets. That's because they have been waiting for rate cuts to come for months. Now, here's where things get truly intriguing. As a fun fact, the Fed has adjusted interest rates during every election year except for one, 2012. This means that there's a good chance the Fed will adjust rates this year. The consensus view is that they'll cut, but depending on the upcoming data, they could hike. But let's not get too ahead of ourselves. There are 5 more Fed meetings ahead of us before the end of the year, 6 if you count the Jackson Hole Symposium in August as a de facto Fed meeting. Anything could happen at these upcoming meetings because the factors influencing inflation seem to be beyond the Fed and the Treasury's control. You can learn more about that using the link in the description, by the way. And with all that said, it's about time we looked at last week's top performing cryptos. So, welcome back, Jessica, and over to you.
Thank you, Guy. Well, last week's top performing cryptos were Notcoin, JASMY Coin, Celestia, the BitGet token, and Audi. Starting with Notcoin, its NOT token appears to have pumped around the continued hype around the Toncoin game. The token was recently released and it's been up only. Like many new crypto projects, NOT's price action has surprised to the upside, surpassing the 1.5 cent target we pointed out last week. NOT is currently hovering around 2 cents and potentially breaking out of a bull flag that could take it as high as 3 cents. Next up, we have JASMY Coin, whose JASMY token presumably pumped due to the crypto project's upcoming appearance at an event in Vietnam. What's odd is that the project hasn't posted on X until over the weekend, and prior to that, it hadn't posted since early May. In any case, JASMY appears to have finished painting a bull flag with its recent price action, suggesting that a pullback could be coming. It is worth pointing out that JASMY's recent price action barely registers on its long-term price chart. As for Celestia, its TIA coin appears to have pumped due to the upcoming airdrop of a new data availability crypto project to TIA stakers. Celestia's own data availability solution also seems to be gaining significant adoption. Unfortunately, TIA's price action isn't looking too promising. It doesn't seem to be painting a bullish pattern yet, suggesting the recent rally was people buying TIA in the hopes of being eligible for upcoming airdrops. TIA may soon continue the gradual decline it's been in since mid-February. When it comes to the BitGet token, BGB likely pumped due to increased traded volume on the BitGet exchange. As most of you will know, exchange tokens tend to have tokenomics designed to make them go up and to the right only, which makes analyzing their future price action pretty difficult. For what it's worth, BGB appears to have hit a local top and could experience a correction as it did the last 2 times it painted this pattern. Just note that it could also be painting a head and shoulders on the long-term price charts, which could spell trouble if it plays out. Finally, we have Audi, the BRC20 token on the Bitcoin blockchain. Since Audi has no website or socials, it is hard to say why it pumped. Our guess is that it has something to do with the Ordinals protocol, but it seems to have been that there are no major updates. Whatever the case, Audi is looking similar to Celestia in that the recent rally seems to be a temporary phenomenon. If it is, then Audi could continue drifting back down to the support level of around $25. If it's the start of a more sustained rally, Audi could retest resistance around $75. If you want to know which cryptos are rallying and also where you can trade them, be sure to check out the Coin Bureau Insider Telegram channel. The link will be down in the description.
And that is all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive trading fee discounts and sign-up bonuses of up to $60,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, the Coinbase merch store has it all.
You can find the link to that resource and many others in the description below.
Thank you so much for watching, and we'll see you all in next week's episode.